What you see in front of you there is one of the largest emerging gold deposits in Africa. It's got one of the highest grades, and I can almost guarantee that the majority of you in this room do not know the story. That's why I'm here, to change that. Forward statements, as a warning, as usual. So that project you saw, the outstanding project, is in the DRC, Democratic Republic of the Congo. Just want to show you here versus some comparable countries. DRC, unlike a number of the others, had elections since 2006. Royalties are 3.5%, which are attractive. Government equity, 10%. We already have the 10% government participation. It's already signed off. Corporation tax is in the right bracket with the other countries. And I think 23 GDP, it was the highest of sub-Saharan Africa. So the reasons for that, you'll see in the top there. That's what Robert Friedland, with his $22 billion Canadian company, Ivanhoe Mining, is doing in the south of the DRC. That's what you can do in the DRC. Things can be achieved. And now it's the second largest copper producer in the world. As far as achieving things, you can see S&P suggests 14 years from finding a project to actually turning it into a mine. So at the bottom there is the project that Rob Friedland and the Chinese are developing, other major global projects around there. But if you look top right, there's our Dumbi project, and then 220 kilometers away is a gold mine, not just any gold mine, the largest gold mine, Africa. It's been mining gold for 13 years. Again, just showing you what can be achieved, this time a lot closer to where our project is, Dumbi. Looking at that project, that mine, Kibali, 220 kilometers away, this is run by Barrick, joint venture with Anglo Gold. And the top there you'll see, this has grown from a 30,000 town to a 350,000 town. Everything we need is sitting there, including tarmac, runways, everything we need. And it's incredibly low cost. Of all 13 Barrick mines, this is the lowest. Reason being, it's most mechanized. It's got hydro, bottom right there. We've started looking at that. We have the potential of hydro. We've had specialists on the ground. We should be able to do that. And then the final reason is the grade of this project. It's outstanding. And when I say outstanding, this is their production in 23, just under 800,000 ounces, 6th largest in the world. Open pit grade 1.6. We believe we're going to be higher. Underground grade 5.11. We're drilling now just to find out exactly what's going on at depth, but we seem to be in that ballpark from the early indications. We don't have their scale. They're 15 years, 15 million ounces, but we believe at the end of this year we're aiming for 5 million ounces in our project, tier 1. So our growth so far, and the reason you don't know the story, well, a couple of years ago there wasn't much to tell, 1.36 million ounces, and during COVID we drilled and we took it to 3.66 million ounces. And we've done a study on it, which I'll touch on in a moment, but the study suggests that we'll be mining that pit 2.2. If you remember, 1.6 was the grade of Kibali, so significantly higher. We found them very cheaply at $6 an ounce. We do great work on the ground. So this is a cut through the pit. The project's about 900 meters long, 140 meters wide, open at depth. And you'll see there on the left-hand side, the indicated is essentially the top 300 meters. Is just over 2 grams a ton, and as you get deeper, the early signs are it's with the inferred 2.65, the grade's getting stronger. You see at the bottom there some of those intercepts, 32 meters, 6.17 again versus just over 5 grams has been mined at Kibali, and 12.45 meters at 8.11, again very encouraging. But we need to drill deeper, and that's exactly what we're going to do there. We have 4 million ounces in total, you'll see, with two other projects. So this is what we're currently doing. We've got one drill rig drilling down to those black dots you see there. That's between 600 meters and 800 meters. And as I say, our aim is to take this project from the 3.66 up to 5 million with what you see there. It's paid for by an asset sale we did over a year ago. We try to be creative. That's what we get paid for as CEOs. Instead of going back to shareholders, we sold an asset 40 Ks away for 10 million US. So we funded to do the majority of the drilling. We've got 14 kilometers of structure to explore, but not the balance sheet yet to do it justice, so we're focusing on what you see here. We do have other areas, as I said, and we've just, in fact, drilled this. This is 8 kilometers away from Adambi, and the bottom there is artisanal work. They're not working there currently. They've done their job as far as they've seen. But we released a couple of days ago a drill hole. You'll see multiple intercepts in one hole, 5 meters at 5 grams, 4 meters to 6.3 meters at 5. That's sort of down to about 90 meters, just popping holes to see what's going on. Because historically, we've had interesting grab samples, interesting geochems. So it looks like we have some interesting zones to make this potentially a mining district. But as I say, we need a larger balance sheet to do this all justice. Share price, we're sitting at 58 cents, and market cap sitting around 60 million US. Loncor management, 22%. And Resolute Mining, the Australian mining group, have 20%. There's been a flurry of activity in the end of October of last year, and that's because I was on the road marketing, where we just didn't have the cash to do this previously, like many of the companies that are around here, tight for cash and spending on priorities. But because of that sale of the acquisition, I was able to go through Europe. I was marketing in Dubai, in London, and then here we are again today. And then also we got Garrick picked us up completely independently, picked us up, and we've seen a pickup in volume and also in the price. I think we're up 40% since November. We currently have about 3 or 4 million US sitting in the bank. So based on that 3.66 resource that we outlined in Adambi, it's all open pittable, and December 21 we got an international group, DRA, to do a 470-page preliminary economic assessment, and the figures are there, but in essence at 1840 gold price, $1 billion after tax. We have 85% of that, the government has 10%. 85% of $1 billion, significantly more than our market cap of 60. If you extrapolate to current gold prices, that figure of $1 billion goes up to $2 billion after tax, 85% of $2 billion, even more of a discrepancy to the 60 million market cap that we have. We already have a mining license on this, so that's another tick, and we'd hope a reduction of risk that you see. So, you know, we believe that we're lagging on that basis. If you look at another way to value us is enterprise value per ounce attributable. So we start with our resource comparison, and you'll see on the table the likes of Predicted, Montage, Orezone, names you'll know. They're sitting around 5. We're sitting around 4 million, and we hope to go, as I say, to 5 million if the drilling brings what we believe it will. All around us, the grays there are company that have been taken out. So we're in an interesting spot for corporate activity as well. This chart below represents the grams per ton, and we're off the chart on the left-hand side. We're the highest grade there, if you include our satellite deposits, at 2.5 grams a ton. So significant quality, we believe. So what is the enterprise per value? Considering that we have the highest grade, we have one of the highest projects, and we're next to Africa's largest gold mine, run by one of the best quality gold producers. Well, we're sitting there at about $16 or $17 an ounce of enterprise value. And we were talking about this, why is it so low? I think there's a couple of reasons. One reason is we're still at the bottom of the Lassonde curve, I believe. And if we, I don't know if I can go back there. Yeah, if we look at the table at the top there, look at Montage. Fantastic job they've done. Over the last year, gone from 89 million US to 514. Fantastic. And they've gone up the curve. They've done all the right things. They've marketed, they've drilled, they've gone to reserves, they've got BFS, they've had corporate activity. So there's a real model for us to look to do. We're doing the drilling. You know, corporate activity will happen if it has, but you know, we obviously we continue to look to foster that. And we're pushing ahead and increasing resources, and if we get more money, we'll do reserves and carry on. So we have that's what we're looking to do with our company. So there's the Lassonde curve. So there you are. We're lagging. We're one of the top discoveries, we believe, in Africa. The tier 1 5 million ounce barrier is very close by. DRC on numerous measures is looking, it's positive signs. Things are actually happening there. And we believe that given all that I've said and the potential and the proximity to Kibali, we're lagging. And I just want to leave you with this. This is something that Mark Bristow said at the last November Barrick meeting. And for your holders here of Barrick who listen into the meetings, he mentions Kibali virtually every quarter. It is a key asset for them, churning out cash. Perception brings a lot of prejudice in emerging markets. When we acquired Motor Mines to build the Kibali mine, 220 kilometers from us, there was lots of apprehension about whether it was doable, and Kibali has been a fantastic investment. We brought in AngloGold Ashanti to JV just to share the risk, but I think there's nobody on our register who would argue against the fact that maybe we should have done the whole lot. So that gives you a flavor of what they think about their investment in the DRC. And with that, thank you very much.